Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, we talked about areas yesterday where the bears needed to take a stand. We've gone up to that area. Testing these three zones of moving averages was going to happen yesterday. They took it right up off the open. They chopped it up for the vast majority of the middle of the day, and then they ramped it up into the close. The dynamic you're going to see here, the green line is your 20-day simple moving average. It's the middle Bollinger Band. That's the delineator of whether we are sell rallies or buy dips. Close above it, and we are back in a buy dips tape, whether you want it or not, whether you like it or not. The market price doesn't care what you think, what you want, or what you feel. Not me, not you, not anybody. It is what it is. As far as we go, we had a good morning. We bought the open. We got chopped up a little bit midday. Right now we're long from down at 18. We've taken profits. We've got a runner with a 40 handle stop on it, down at like 58.5. And what I said in the room yesterday. So you got the, hold on, and then we'll talk about this in a second. The 50, the 100, and the 20. This is the zone that needed to get tested. You got a battle over three moving averages, and this is the area where if the bears are going to fight back, it really is basically, this is the last chance saloon. This is the Alamo. Because if you test it here and you hold the 50, because it broke down from the 50 earlier, and that's fine. Okay, take it down, retest the 50, bring it in. But it can't be break down from the 50, take it down here, blast off. Because if you take this out and you convert it, it's not all going to happen in a day, at least probably not. Then you start to, it's a very rapid move up to retest this breakdown area from January 18th, and that's 46.71. There's really nothing in between. The trick and the problem is when you take it down like this, it creates massive air pockets up to the next resistance. So you got a little bit here from the 19th at 46.03, but you're at the point now, you got a Globex high of 45.75.75. 4,600 isn't open and it's not magnetic yet, but do another 10 handles and it is. It just becomes 4,500. And, people that have been subscribers of ours for a while, if you've listened to the webcast for a while, you know that I talk about quick 100s. This was a very quick, potentially a very quick 100. We were dealing with 4,500 yesterday. We could be dealing with 4,600 today at the latest tomorrow, unless the bears come in and do something about it. Or you get some piece of news that's going to knock it down and keep it down. Hourly chart. Here was a zone that we drew. This is the breakout from Monday. Took it up into the close. You had some support here at the hourly midband for the vast majority of yesterday. And then you see here, and they were also fighting over the new monthly pivot at 45.04 quarter. But you could see 2 o'clock, 3 o'clock. They popped it up over the top. They had a little bit of resistance where they needed to have it, which was at the 20-day. But now as you come in here, 28 has been support all night. They came back to test the 100. That's the yellow line. And now we're up here. So, then up here the red line is the 50-day. So you've got just this steady bleed to the upside that the bears are going to have to come in and actively deal with. They're going to have to actively deal with this. They can't sit around and wait for, I don't know. These are not, at this point, these are not week longs anymore. They could become week longs very quickly, but nobody's a week long above the monthly pivot and the 20 and the hourly midband and the 100-day. Especially after you've already cracked the pre-FOMC price, the 9-day, the new weekly pivot's like down here, in the Grand Canyon. So the bears are going to have to be very active to fight this off. And if not, then we go do what's next. 4,600, 50-day, 46.21. Not necessarily today, but that's the way it's going to go. And I know this was a very wide consolidation, but it was still a consolidation. It was a great trading tape, but it's still a consolidation. And once you work that off and things get directional, they can go a heck of a lot farther than the people on the other side want it to go. So long story short, bears, you better step in and do something about it, or you're going to get dragged. You're going to get dragged for a while. Because now people start to pile in. and they don't want to miss out on the next move. Bottom line. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Be good. Talk to you tomorrow.